Hello, ladies and gentlemen. Once again, we're here today for a Wednesday Wealth Facebook Live. We have a lot to talk about. We want to thank you for coming out tonight. This concludes our month-long series as we celebrated Juneteenth over the weekend. Um, this concludes our four-part series on home ownership, the real estate market, and exactly how we can create generational wealth. We started off a couple weeks ago talking about interest rates and how important it is for us to be a homeowner compared to a renter. Okay. And we understood that it doesn't matter exactly where you're at in the process or where you're at personally. Real estate is something that you is mandatory here in the United States almost, because if you're not paying rent to somebody, then you're owning your own home. Somewhere along the line, you got to have a place to lay your head. So we talked about how important it is for you to get involved into home ownership because it creates generational wealth. And I've rented before in my life myself. So we celebrated that, but we also want to celebrate you becoming homeowners. And we are getting ready to talk about a great topic. So I want everybody to at least start to share this. I think it's very important as we talk about the interest rates going up. I was speaking to a young individual today, and he was saying that, hey, the interest rates are going up, and that's the excuse for not buying. So, and my response was, it's only because you missed the opportunity to get the 3%. That doesn't mean that you should stay on the sidelines while the interest rates go up and you still are paying rent to somebody else. Because guess what? As their rate goes up, they're going to charge you more to rent that particular building or that particular house that you desire to rent. So, with that being said, last week we talked about how important it is to surround yourself with the quality banks that you can use that will enhance your opportunities to becoming home ownership. Tonight we're going to talk about a very big topic, and it's one that's very dear to me. The Calvary is not coming. The creek is rose and the levee is given way. It's up to us to save us. So today we're going to talk about exactly what is the new discriminating laws that's going on in our community that's stopping us from becoming homeowners. And over the past couple weeks, it is becoming glaringly clear that most people that are trying to buy a house, they're either in FHA, which is a Federal Housing Association, which is a first-time homeowners. Most people are involved in first-time homeowners, or they're conventional. And I've talked to a lot of realtors over the past couple of weeks, and this is the new thing that I'm beginning to realize, is that a lot of the realtors have taken it upon themselves to tell the clients or to advise their clients to where if it's not an FHA loan, then they advise them that that's a bad product. Or if it's not a conventional loan, that's the way they should go. Now, if you don't know what an FHA loan or a conventional loan is, let me kind of educate you so we can know exactly what we're talking about here. An FHA loan is a loan that is for an individual that wants to bring down 3.5% of the value of the home, of the closing costs. Okay. Now, we understand that we're in a very tight market. We understand that we're in a market to where it's very competitive in the home buying process, right? So most sellers are not paying the closing costs. So you got to bring 3.5%. Most people want to bring as less money to closing as possible. Okay. So we get all that. Now, if you have pretty decent credit, 650, 640 scores, then you can be considered for a conventional loan, which traditionally brings 5%. And so what has happened is most sellers, they hire a realtor, and the realtor represents the seller, right? And then if you go out and you're trying to buy a house, the seller, you can get a realtor, and your realtor is supposed to represent you. And so what has happened is these two realtors, they start talking with one another and they communicate and they put the deal together. But one of the things that they're not telling our buyers as African Americans is that they're telling us that if you are a FHA buyer, okay, most of the sellers do not want to sell to you. I wouldn't say most. Some of the sellers do not want to take your offer. They feel like it is a more of a risk, quote unquote, for an FHA buyer than it is for a conventional buyer. Okay. And they're saying that their appraisals are different also. So let me kind of educate you on the process. I'm a loan officer, and I've been a loan officer for a while. And I've been in the lending business for over 20 some years, 25 years. So let me kind of educate you on the FHA and the conventional process. An FHA loan um, appraisal is not that much different than a conventional appraisal. Now, the difference is this. On an FHA loan, they're going to make sure that that house is in working condition. Just like on a conventional loan, any appraiser is going to make sure that that house is in good condition. You want to buy a house where there's appraisal that is making sure that it's in good condition. And it really doesn't matter if you're buying a $200,000 house, a $70,000 house, or $1 million house. You want to make sure that the appraisal that you order is making sure that that house don't have no structural problems and things of that nature. Secondly, the difference between a FHA loan and a conventional loan, an FHA loan requires that you occupy the property for at least 1 year. Okay. On a conventional loan, they do not require that. Okay. As far as the appraisal is concerned, it's all the same. I closed on a loan about 2 weeks ago, and it took about 2 weeks to get it to close from start to finish. When we actually started, 18 days from start to finish. And it was a smooth process, and it was an FHA loan. Well, as I was talking to my realtor friends, they were saying that this is something that's unheard of. And I was like, no, that's not the case, because we have to hire an appraisal through an independent agency. Back in the day, before the stock market crashed, we could order the appraisal. The lenders had direct relationships to the appraisal. Okay. And so what happened is the lender actually, we would go to the appraiser and he would say, hey, I can get out there. And we would actually schedule the appraisal, and it would get done, and then we would get the appraisal back, and we got a lot more control. Today, that's not the case. After the stock market crash and after the mortgage fraud, the government put in a lot of stipulations for the mortgage brokers in the finance industry. They did not regulate the real estate industry, and did not hit the real estate industry as hard as they did the financial industry. They kind of gave the real estate industry a scapegoat. They kind of gave them a free pass. And I'm not saying that it wasn't a lot of things that we did was fraudulent, but some of the people needed to be penalized. But it also, the real estate agent needs to be scrutinized as much. And the reason why I say that is this. When a realtor says to the client, hey, you don't pay me, they're telling the seller, they're telling the buyer this, the seller pays me. They're not being completely truthful. Okay. When they say that price, if you're buying $100,000 house, then that house is 100,000. Well, the realtor fees on that is 7%. If there's two realtors on it, a buyer's realtor and a seller's realtor, you're going to get 3.5% from the seller, 3.5% from the buyer's agent. So a total is going to be 7. So if you're buying $100,000 house, it's going to be $7,000. That's the realtor fee. The max that a mortgage broker can charge is 2%. Okay. And that's all fees included. So it's not even a matter of, is it fees? It's a matter of how you are getting paid. So when you hire a realtor, you definitely need to make sure that that realtor is very competent. They make sure that that realtor represents you, but you also want to make sure that when you're using a realtor, that you make sure that that realtor is not penalizing you because you are an FHA buyer. Okay, so that's the new redlining that I'm starting to see in the industry. When a realtor is submitting an offer, they supposed to submit the offer based on your earnest money and the offer that you wanted to submit. And they do have a mock box in there to where you can check conventional, uh, other, or FHA. Traditionally, FHA, you had to do a little bit more work because some people had a couple of dings on their credit in the old days. Okay, we would have to work a little bit harder to do FHA loans. That's not the case now. We have people that score 650, 660, 670 that still want to take advantage of the 3.5% down payment assistance programs, and they just want to use an FHA loan. That product is something that we offer to our primary clients. Is based on, it's a case by case situation, and it's not necessarily a person who have credit issues the reason why they're going to FHA. It can be a lot of different reasons. So when a seller is talking about selling his house, yes, the real estate agent is supposed to look out for the best interest of the seller, but it shouldn't be predicated based upon if it's a FHA or VA or a conventional loan. Okay, so these are the things, that the dog whistles that's going on in our community. So some of you have become first time homeowners, and you guys have not been able to get a home because you are FHA or you have an FHA pre approval. Well, this is how you combat that. Like I said, the cavalry is not coming, the creek is rose, the levee is giving way. It's up to us to save us. Okay. So, one of the things that you can do when you're talking about an FHA loan or a conventional loan, when you're setting that up with your realtor, you want to make sure that your realtor understands that yes, you are an FHA buyer, yes, you are a first time homeowner, but you don't want that realtor to prejudge you and your offer on that home. Okay. I was speaking to an individual today, and we spoke in great length. And there's two things I want us to start to be educated on. One is called gap. Okay. We had a seminar about 2 weeks, 3 weeks ago, and one of the realtors that was in our seminar, Lakeisha Laley, which is great. Have you heard from Lakeisha lately? If you're looking to buy a home, you need to reach out to us, inbox me, let me know, and we can get you set up. Okay. But Lakeisha taught us that gap is what is real big that's in the real estate industry now. So, what is gap and what is this new term that we're talking about? Well, gap is saying that if you're making an offer on a home, and the house and the sales prices, just for the purposes of us discussing this tonight, is $100,000, and they have offers on the home, and then people want to pay more than what the house is worth or what the sales price is. So that price goes up to 110 or 120. So the real estate agent, by law, they're binding to come and tell you that this is how much the offers are. Okay, they don't come and tell you, but they say, hey, these submit your highest and best. Okay, so they accept your offer at $120,000, right? The lender is only going to lend you the value of 100,000 because that's how much your appraised value is. So that's how much they're going to lend minus closing costs, right? So what GAP says is that if the house comes back at $100,000, then you're going to pay the difference. So if you make an offer and it's accepted at $120,000 and there's GAP, you got to pay the difference. That means you're going to pay the $20,000 plus the closing costs. And so as a mortgage lender, I have to verify that. It is normally We want to see it in the account 2 to 4 months. Okay. So, or it can be a gift, but it's case by case based on your credit. But let's talk about the gap. So actually, when you first purchase this home, gap will come into play. Is that you're going to be upside down on this home when you first walk into it. If the house appraises for what it up the listing price. Okay, so you're going to be owing on a home 100. You're going to put in $20,000 on this home, plus you've been gave $100,000 with the mortgage. So now you're in it $120,000 when you get the keys. And not saying that the house want to go up in value at a later date, but when you're walking in your home, you're going to give your hard-earned cash, and that's going to be equity that you traditionally won't have in your home. Okay, so that's gap. So as I begin to start to understand, the bait and switch is this: they know that buying a home is a very emotional thing. Okay, you find a house, you love the house, you can see yourself raising your family in your house, and so what they do is they placate that. So what they say, and it goes like this: hey, Mr. Jackson, give your highest and best offer. So I give my highest and best. And then the next thing they say, okay, then we got to add gap in this, because if the house doesn't appraise, or if we get, if the house doesn't appraise, you're going to still be on the hook for the rest of the amount. So it doesn't matter if the house doesn't appraise, you're still going to be on the hook. So that's what we had to deal with. That's what most of you guys are dealing with in the housing market, because this is a hot housing market. Everybody's looking to buy, everybody's looking to get into a home, and this is what the realtors are presenting to you as a seller. I mean, as a consumer, as a buyer. So let's talk about the next term. I learned this term today, which is due diligence. And this term, due diligence, is another term that puts us in a very bad position. So, due diligence says after I give my earnest money, right? The house is, I spoke to a realtor. She's a trainer in great depth today. She said that, hey, after, and then they put it in the contract that you have to do due diligence. And that means that if you give a $10,000 earnest money, that they want to take 2,000 of it or 1,000 of it or whatever it is, and they want to make that a part of guaranteeing that the seller is going to buy you, that the buyer is going to buy that house. Not just the earnest money, but they want to take another fee to make sure, which is non-refundable to the seller, so that they can make sure that that person don't back out of the deal. Well, legally, that's kind of deceiving, because when a person gives the earnest money, by law, that once they accept it, they have a binding contract, and they're trying to get the house appraised and the title work ordered as soon as they can, so they can close on the deal. But this is where I think that we need to pay closer attention to, where it is becoming a slippery slope. When we are trying to purchase a home, okay, and they say, one, submit your highest and best, and then they want to come back and say, listen, we also want you to give a lot of that earnest money. We want it guaranteed. So because my seller is taking the house off the market while you're trying to get financed within the 30 to 45 days or 2 months. So whatever the case may be. So they're saying that, hey, we don't want to take that risk. We want that risk to be spread out, and we want you to pay for it. And so as I was beginning to talk to the real estate agent, I was like, who's representing the buyer at this point? Because who would want to submit an offer where the buyer has to pay an extra fee that's non-refundable, even if the house don't appraise or if something goes on with the house? And so I began to be very clear that this is what's going on in our communities. Not only is it important that we understand what we have going on, but it's also important that we understand what the different programs are. So we're having a seminar this coming Saturday from 1 to 2. I mean, from 12 to 1, we're going to be dealing with credit. And then from 2 to 4, we're going to be dealing with the home ownership. If you are looking to buy a home, you need to come and inbox me today, inbox me tonight, share it with your friends. If you are a renter and you've been at your job for 2 years, you need to come on out and we can help you get into a home. We can tell you what's on your credit. We can tell you what you need to do to fix your credit or get to the score that you need to do to where you'll be satisfactory to the lenders. Okay, so the seminar is this coming Saturday, 9,000 Keystone and the Crossing, 12 to 1 o'clock is the credit seminar. 2 to 4, we're going to take you around and look at some beautiful homes, help you achieve your dream. So the cavalry's not coming, ladies and gentlemen. The creek is rose, the levee is giving way. It's up to us to save us. So I am on a crusade now to help 100 people get into homes. And so as I begin to dialogue with realtors and builders, these are the things that is crippling our community with home ownership. I used to think that financial literacy would be the solution to the problem. Education is definitely a part of the solution, but action is also a part of the solution also. Education without action can be seriously bad for us. So what does that mean, Cepeda? That means that once we know something, okay, once we know that the interest rates are going up, once we know that gas prices are higher than what they usually are, once we know that generational wealth is based upon what you own, not what you can purchase. There's a difference. You can purchase something but never own it. Okay? So once we start to realize these things, then we have to change course. So what am I suggesting? The first thing that we got to do is start holding each other accountable. Okay, so when a realtor comes to us or a mortgage broker comes to us and says, hey, listen, I want you to submit your highest and best. Okay, so it's on that mortgage company to get you the lowest rate on the market to make sure that you got the most solid deal on the table. That's one of the things that we struggle with as mortgage loan officers. When is enough enough? I was speaking to an individual just yesterday, and the young man came into my office. And we got to understand what these banks are saying and what these banks are doing. Okay. So what happens is when a bank wants to get involved in the market, okay, they'll come in and undercut the market. And what do? They offer all type of programs that traditionally they're not going to offer. Okay. So what are they offering? They'll offer, we'll pay all of your closing costs. We'll come in with the zero money down, and we'll give you the lowest rate on the market. Only thing you got to do is use us. Okay. You go in, you use them, and we do like everybody else do. We tell our friends and family and people, our coworkers, hey, I got the best deal on the market. They paid all of my closing costs, and I got everything that I wanted in my home, and I didn't have to bring no money to the table. And my grandmother used to tell me, Cepeda ain't nothing free. Okay. So what does that mean? That means that you got a great deal, but the banks are not always going to keep doing that deal. So what happens is once the bank fills their quota, then they stop and cut the program off. But guess what? That didn't stop you from telling people, hey, this is the bank that I use. A lot of banks, when they get in trouble with redlining and things of that nature, they'll loosen up the lending for a short period of time, get a lot of people coming through the doors, and then they'll tighten back up. Well, then you feel like, hey, I don't have any other options. So now I have to take what they're giving me. So I'm telling you right now, work and know what your credit is before you go into the bank. Secondly, when you go into the bank, make sure that you have the proper income documentation. Make sure that you have your W-2s. Make sure that you have your current pay stubs. And you want to have 2 years W-2s. You want to have at least 4 current pay stubs. You want to show what's on your credit report. Okay? You want to do all of these things while you're trying to purchase a home. Okay? The second thing, thank you, Kim. We're going to be at 99,000 Keystone and Crossing beginning at 12. We're going to be there. Okay, we're going to be there at 12. We're starting on time. We're going to help people get to the credit that they deserve. Okay, we're going to help people become homeowners. We're going to help them understand their credit. But getting back to what we're talking about here, once you decide that you're going to buy a house, you're going to make sure that your credit normally has to be a 580 or above. Okay, I'll say that again. It needs to be a 580 or above. That is to get you through the door. Okay, so what happens when you get ready to get to a 580? You have to talk to your loan officer or your banker. And what happens is they're going to ask you, do you want to do a conventional FHA, VA, if you're a veteran, or a USDA? USDA is more or less farmland. So most of the loans are conventional or FHA. Well, what is happening is the real estate agent submits it to the other real estate agent if they're not the listing agent, and they're going to advise that buyer what they're going to do. Now, ultimately, it is the seller's choice to choose which one they want. But what is happening is most African Americans, they are choosing the FHA product, and this is how they redline. Okay, some lenders, some housing subdivisions say no FHA. What does that mean? That means that no low income, not necessarily low income, because we have, like I said earlier, we have some people that are FHA approved that are high income people. The minimum loan amount in the state of Indiana, I think, is $420,000. So you got to qualify for that. Okay. So what happens is that you're starting to get turned down, not because you're not qualified, is because of the type of loan that they're submitting to the homeowner. The homeowner is taking the advice of some of these realtors, and they're turning them down based upon if you're an FHA or a conventional buyer. Now, that lies the problem within itself, and there's nobody out here talking about that. That says that I don't want to take your loan, or I don't want to accept your offer because of the type of loan you have. That's what it's saying. So we got to make sure that we are educated on that process. So when you're submitting a loan, make sure that your realtor understands the importance of having a fair offer. Okay, I don't know what caused this problem per se, but it really needs to be regulated. If you are struggling with finding a house, and you feel like you're discriminated against, there's all type of tools that you can use. Just give us a call. We can point you in the right direction. But getting back to the home ownership, make sure that your offer is not overly aggressive to put you in a position to where when you get to the closing, you can't close. Like I said, ain't nothing free. There is no free lunch in the mortgage industry, in the housing industry. If you're not putting any money down, it's going to come back to bite you in the long run. Where it's going to get you at is PITI, private mortgage insurance. If you don't put any money down, you're going to have to jump through some bells and whistles, and you're going to end up paying a little bit more, because the more money you put down, the lesser your interest rate is. You can even buy it down. Okay, that's something that you need to consult with your loan officer. Well, let's get back to the banks, because the banking industry is a part of what we consider having the American dream, because that's how we get financed. So when the banks come up with these great programs, we got to be aware that, guess what? that program might not be around for a long period of time. And so realtors are compensated based on straight commission. So they want to take the client, they want to work with the best clients. And I know there's some realtors out there that will say, well, no, I am passionate about what I'm doing and I don't agree, I don't disagree with that. And they might even say, hey, I'm putting my dues, I pay my dues, not even disagreeing with that. But there are some realtors out there that will not work with FHA buyers as hard as they do with conventional, under the impression that an FHA buyer is a lot more difficult to get done than a conventional loan. They both, if the loan officer knows what they're doing, they both takes about the same amount of time. So the cavalry is not coming. The creek is rose. The levee is giving way. It's up to us to save us. We must begin to educate ourselves on real estate and financial literacy. So let's get back to what we're talking about as far as the discrimination in FHA and conventional. When you are buying a conventional loan, when you have a conventional loan, that says that you have the lowest rate on the market. Okay. That also says that the program is geared towards you being a quality buyer. Okay. They're saying that you have some things that you have done in the past that have showed these banks that you won't default on your loan. Okay. That is a conventional buyer. So we must understand that what they are labeling us as when we're trying to be involved in the home buying process. The cavalry is not coming. The creek is rose. The levee has given way. It's up to us to save us. So when you're looking for a real estate agent or a mortgage company, it doesn't matter which one. Let me give you some pointers. Make sure that the mortgage company and the real estate company represents you. That is first and foremost. You are the consumer. So make sure that they represent you. Two, not only do you want to make sure that they represent you, but you want to make sure that they're communicating what you said. Not what they want you to say, but what you said. If you want them to tell, you want them to be a spokesperson for you. Okay? Thirdly, you want to make sure that the real estate agent is competent. And you want to make sure that the mortgage company is competent. You want to make sure that they have a work history and a work ethic that is in line with making sure that you personally get the best product out there. Now, being in the mortgage business, you want to make sure that the mortgage company is responding to you in a timely fashion. Now, I know we get busy sometimes, and I know that, sometimes I even miss calls. And sometimes, depending on how the client is trying to contact me, I can't get back and contact them for, in a timely fashion because I have those other profiles going. But most of the time, the mortgage company should be able to communicate three things to you. The loan officer should be able to let you know what your interest rate is, what your monthly payments is, and what's in the steps to get to the closing table. That's what a competent mortgage company would do, a loan officer would do. As a real estate agent, the same principle applies. You need to be able to contact that real estate agent. Two, that real estate agent needs to be very competent on the market that you're in. And three, they need to make sure that you have all of the disclosures on that house so that when you get ready to close, there's no problems with you being questioned in reference to the home. That real estate agent is getting paid 7% from the from the seller, but they're going to say it's from the buyer. But you got to remember, if it's 7%, that real estate agent is getting paid from the seller, but it would be 7% cheaper if they didn't have a real estate agent. So I'm not saying don't use a real estate agent, but what I'm saying is hold them accountable just like the mortgage company. Okay? Thirdly, make sure that you do not go and apply someplace else and get dings on your credit and your credit score drops. Because if that happens, that lender is going to turn you down. So you want to make sure that you're doing everything that you could possibly do. Make sure that that real estate agent is involved in the community that you're buying your home. Make sure that they know a little bit about the market that they're in. Same thing with the mortgage company. Make sure that they understand what the rates are. Make sure that they understand what your program is. You should be able to call that mortgage broker and get the price in a ballpark figure, what your interest rate is and what your monthly payments is before you get to the closing. Okay, so and don't let the real estate agents nor the mortgage companies, tell you that because you got an FHA loan, you don't qualify, and don't let them tell you that because you got an FHA loan, you got to get a different appraisal and it's more strict. No, what that means is that they're saying that they really don't want you to buy that house because you are an FHA buyer. So we got to press through that stuff. The cavalry is not coming. The creek is rose. The levee is giving way. It's up to us to save us. So the last piece is, the last caveat, and we won't be on this too much longer, is we must understand that when we get turned down or our offer don't get accepted, that is not an opportunity for you to just give up and throw in the towel. We must begin to overcome that being turned down. That's all right. Didn't accept my offer. That's all right. I'm going to keep submitting offers. I'm going to keep a positive attitude until I eventually get my dream home. And then when I get my dream home, I'm going to make it. I'm going to make sure that I turn around and encourage somebody else, because that's how we build generational wealth. When we start to build generational wealth, we can actually change our communities. We can change our homes. We can change our families. It's time out, ladies and gentlemen, for us to be just me, my four, and no more. We must begin to understand that we must get involved in what each other is doing and helping each other achieving the American dream. Yes, I gave you some big things tonight talking about FHA and conventional, but FHA, once again, I want to stress, it is a great product for first-time homeowners that is looking to purchase their first home. But we don't want to knock it on the conventional. Conventional, most of the time, they have better credit. But that in this environment that we're in, everything is digital. So we don't have to worry about if it's going to be a good product or if they're going to do anything that's going to fall out. People with good credit turn down deals just as well as people with bad credit. And only because you're getting an FHA, and I want to stress this, only because you're getting an FHA loan doesn't mean that you have had bad credit. That just means that that's the best product for you. So when we're talking about, submitting offers, have that conversation with the realtor, because these realtors are starting to have conversations with some of the buyers and saying, if you're an FHA, we don't want you. Or if we're saying, if you're FHA, submit your offer, but we'll take a conventional because they are a higher, better candidate. So we must understand that this is what we're up against. So don't get discouraged if they turn you down, don't accept your offer. Don't get discouraged. Stay in the fight. You have to overcome all of those things in order to become a homeowner today. And it's worth it. So once again, ladies and gentlemen, this coming Saturday, 9,000 Keystone in the Crossing, 12 o'clock, we're going to have a credit education class. What that entails is we're going to talk to you about credit, how you can improve your credit, what you can do to become generational wealthy through your credit. Then we're going to have the next half, 2 o'clock. We're going to come back at 2, and then we're going to talk about home ownership. And we're going to drive you around and look at some of the most beautiful houses here in Indy. And you're going to be able to put a purchase agreement together and get an offer accepted at the same time. So once again, ladies and gentlemen, the cavalry is not coming. The creek is rose and the levee is giving way. It's up to us to save us. I am so looking forward to helping each and every last one of you become homeowners. I am so looking forward to come December 31st. We're going to have 100 people that have bought a home. I met with some investors today, and they said that they have more than enough houses that we're going to be able to sell. And if you are looking in the market to buy a home, you need to be there this coming Saturday at 12 o'clock to 1 o'clock. You can get your personal credit straight, and then from 2 o'clock to 4 o'clock, you're going to be able to go look at some of the most beautiful houses here in the city, and you're going to be able to make offers on them just like you do back in the day. So once again, ladies and gentlemen, this coming Saturday, June the 25th, 12 o'clock, we're going to be at 9,000 Keystone in the Crossing, helping individuals get their credit straight. If you are looking to get out of the rat race of renting, this is the place for you. If you are looking to make a change, put your kids in a better school district, or even just have a change of environment, this is the place for you. Ladies and gentlemen, I have been laboring, should I talk about this as far as the FHA and conventional? But one of the things we cannot shy away from is having the character to stand on something. And so you must begin to understand the difference between an FHA loan and a conventional loan. The real difference is on an FHA loan, you got to stay in the house for 1 year. After that, you can sell the house, do whatever you want. But on a conventional loan, it's immediate. You can flip it, buy it, sell it, do anything you want with it. Once again, ladies and gentlemen, the cavalry is not coming. The creek is rose, the levee is giving way. It's up to us to save us. We cannot depend on nobody else to save us. So next week, we're going to start bringing back the businesses. We're going to start talking about what's going on in our community and who's doing what. Next week, I have some great speakers set up for the next 4 weeks. I have some great speakers set up. You cannot lose when you bet on yourself. In conclusion, there was a man who had dogs that was a king that had dogs, and he would feed his servants that offended him to the dogs. And this king had a guy that worked for him for 10 years. Okay. And he gave him some bad information. The guy gave him some bad information. And so the king got upset. And he said, you know what? I'm going to feed you to the dogs. And so the young man pleaded his case. He said, listen, king, I made one mistake in 10 years, and you want to feed me to the dogs? And the man said, listen, a rule is a rule. So he said, okay, I accept my fate. But because I worked for you for 10 years, could you do me a favor? He said, yes, I'll grant you one favor. He said, could I feed the dogs for 10 days? Spare my life for 10 days. I have a love affair with dogs. I want to just give me 10 days. And he accepted that. The king accepted it. So every day for 10 days, the young man went in and fed the dogs for 10 days. So the 10th day came, and the king summoned his servant to him and said, okay, today is the day. You're going into the dogs. And so the young man went into the thing, and the dogs came and licked him on his feet and was hugging him. And the king was disturbed. And the king said, what happened? What did you do to my dogs? And the young man replied, I was loyal to you for 10 years, and you wouldn't forgive me for one mistake. But I was loyal. I was only had a relationship with these dogs for 10 days, and you see how loyal they are to me. Message is that, ladies and gentlemen, sometimes you have been loyal to yourself for so long until when somebody's trying to help you, you don't even realize that your opportunity is right there. Just like the king, he didn't realize that he had a committed man right there beside him. It took some dogs to make him realize that loyalty is a price that we pay. Once again, ladies and gentlemen, some of you have been trying to get into home ownership. Some of you guys have been trying to get involved and get your credit straight. Some of you just almost given up. I'm here to tell you tonight that here in Mad Capital, we want you, and Loan Simple is the mortgage company. We want you to have generational wealth. We want you to be loyal to the person that you know has been you've been dealing with for the past 25, 30, 40, 50 years. The person in the mirror is who I'm talking about. You don't have to take a low down seat to somebody because you can't purchase a home. You can get into home ownership. You just need to get to the right environment. And we are here to help you get there. The young man who went into the dogs, I'm sure that he was nervous, but he had something that he knew. He knew that if he became a servant, that he could spare his life. So it's not life changing. It is life changing when you're trying to buy a home. Ladies and gentlemen, we must begin to look at what we can do to help ourselves. And what we're trying to do here at Mad Capital is make sure that we help 100 people get into homes before December 31st. We asking you to help us become a part of a movement that's going to help create generational wealth for us and our community. The Calvary is not coming. The creek is rose. The levee is giving way. Just like the young man who was thrown into the dogs, you have to figure out what you can do to make best of a bad situation. Yes, people are getting denied, people are being turned down, and we can look at it a lot of different ways. But there's one thing that I stand on. If you bet on yourself, you cannot lose. Ladies and gentlemen, we are at the best place that we can be. Yes, the interest rates are going up. Yes, people are starting to come in and make assessments of our community. But I'm telling you this: if you bet on yourself, you will never lose. You must begin to bet on yourself, and guess what? You'll feel good about it. The Calvary is not coming. The creek is rose. The levee is giving way. It's up to you to save you. Guess what's going to happen when you start to bet on yourself? You're not going to have to look over your shoulder. You're not going to have to look around the corner. You can look yourself in the mirror and say, hey, I put my best foot forward. That's what home ownership, financial literacy, that's what you owning your own business. That's what we're living in. This is the time that you can do it. I believe in you. I believe that we're living in the greatest time ever, and that if we take advantage of this time that we have, we can make it. If you are looking to buy a home, single mom, single dad, doesn't matter, been turned down, doesn't matter, come out and join us on Saturday, June the 25th at 12 o'clock. And we are going to become homeowners with one another. I want to celebrate you. The Calvary's not coming, ladies and gentlemen. The creek is rose, the levee is giving way. We're going to be able to give you pre-approvals right there on the spot if you can bring your W-2s, pay stubs, and if you qualify right then, we're going to be able to give you a pre-approval that we're going to have realtors there, we're going to have builders there, we're going to have the whole nine there. Only thing we need is you. I have set it up just for you to come out and get pre-approved, get ready for your home. And guess what? If we don't have a home, we can find a home for you. We got realtors that are quality. So give us a call. The cavalry is not coming. The creek is rose. The levee is giving way. It's up to us to save us. Till next week when we start promoting the different businesses. I feel a little hungry, so I might have some I might have some restaurants on here. We haven't featured none of our African American restaurants yet, so I think we're gonna be bringing on some great people that's doing some dynamic things in our community. So once again, ladies and gentlemen, thank you for allowing me to come into your home every single Wednesday at 6 o'clock and talking about betting on yourself. If you have not got your kids involved and you haven't pulled them onto the show, shame on you. But we want to keep doing the things that we're doing, betting on ourselves. Till next week, keep betting on yourself. Remember, the cavalry is not coming, the creek is rose, and the levee is giving way. It's up to us to save us. Till next Wednesday, keep betting on yourself. See you later.